hopeful that the numbers will be coming any time for Reliance Industries, so keep an eye on that. The numbers could be on BSE or NSE in any moment from now. We all have been waiting for that important number coming from Reliance Industries, and there are the numbers. Okay, for the net profit standalone, it has come at 7704. So 7704 is the number which is, ahead of what we were expecting clearly in terms of the profit numbers. And the total income is again much ahead of what we were expecting. I think this is a big surprise. Okay, big surprise coming in from there.
No, absolutely. I think the net profit number is what? I think a good 400 crores higher than expected at the net profit level, because the number you want to look at is the standalone number, 7,704 crores as compared to 7,266 crores. So roughly a 300 crore beat on the bottom line. And the top line, the number that I have, which flashed at the bottom of the screen, was about 64,000 crores and some change, slightly higher than 64,000 crores. The expected number, our poll suggested that the revenue would be about 57,384 crores. So there also, there seems to be almost a 6,000 crore beat.
But I think margins is number is what I'm watching out for. And the margins are not looking that great compared to the poll. The EBITDA margins, as per the calculation, is coming around 16.4%, and the poll was 18.3%. So we need to look.
I think the culprit is other income, Marinder.
Yeah,
so
exactly.
2280 crores is the other income which has come in, and that is 35% higher. The flashes again at the bottom of the screen. So these are the very initial numbers which are coming in. But I think the other income would explain some of the bottom line beat. I mean, the top line beat, which actually is coming in. But I don't know how many. I mean, that's the number, 35% higher on other income for Reliance Industries. So I think we have three numbers: the top line, the bottom line, and the other income. Some of the other numbers, the most important, widely kind of talked about number, of course, is the gross refining margin, which was 11.5% in the last quarter. That is the first quarter of 17. And I think we should have that up shortly for you as well. Our guests are also going to be joining in. Prakash Dewan is sitting right next to me here, and we'll have more opinion on these numbers as they come in. Petchem revenues, wherein some more numbers are coming in.
Yeah, as you said, the other income component is the one by which you are seeing that, the entire picture is looking much brighter, but the margins are not looking that great for Reliance Industries clearly. So if you're looking at, some of the segmental revenue, I'll come at the EBIT margin, which is very important for these companies, for this company exactly. So I'm calculating that as of now we are speaking. So if you look at the Petchem, it has come at 21293 crores, which on a quarter-on-quarter basis has seen a growth, okay? So which is a good thing in terms of that. Prashant, I'll just, if Prakash can chip in here, okay, I'll calculate the EBIT margins for all the segments and I'll come back in a moment.
Prakash, you want to take a quick shot at this?
So I think I would still believe the softness in the GRMs would have been compensated by this other income component very, very clearly. But the Petchem, there's too much of hope riding on that Petchem revival, and especially the previews all talked about that being stellar. So if there's any disappointment in Petchem margins and the growth, the revenue itself, that could be a little bit of a disappointment. But they magically seem to get the top line always beyond the expectations of the street, and that's exactly what we'll have to fathom going forward once the GRMs are out.
I'm calculating EBIT margins, okay. So the Petchem EBIT margins are clearly very good, okay. They have come at 16.3% EBIT margins. I'm talking about for the Petchem segment, and as we were mentioning that most of the people on the street were expecting that the Petchem division could see revival this time. 16.3% compared to 14.9% on a sequential basis. And if you have to compare Y on Y, it has come at 16.3% compared to 12.7%. So Petchem is the one which has done very good this quarter. If you look at the refining, on a sequential basis, the EBIT margins for the refining segment are down, which was expected. 11.4% is the EBIT margin for the refining segment in this quarter compared to 13.4% on a sequential basis. So let's just focus on the sequential numbers as of now. That is what people are
So
expecting.
you got two numbers for us. One is Petchem 16.3 compared to 14.9. This is quarter on quarter, seems to be better. But refining is 11.9 compared to 13.4. Refining, as you said, was expected because the input cost went up.
Also,
the price of oil went up.
I'll give two more numbers, okay? Because if you look at the segmental sales for Petchem is up by 10% on a sequential basis. For refining is also up by 6% on a sequential basis. Now, where is the culprit in terms of the margin picture? Because we're watching out for the margin picture, and that is why for Petchem, look at the number 3464 crores on a standalone basis, which means a growth of 19% on a sequential basis. The EBIT number I'm talking about. So the EBIT number is up by nearly 19% on a sequential basis, but refining EBIT is down 10% on a sequential basis, and that is where the EBIT margin has come down a bit.
So Petchem refining is up 10%, 19%, and refining EBIT is down 10% sequentially. These are sequential numbers.
I think we also have Sudeep with us. Sudeep, your first comments on the number, please.
Yeah, hi. Broader number, if you look at the broader number, revenue is ahead of our expectation of 561 billion, so revenue is definitely ahead of expectation. But EBITDA is in line with our expectation. Our expectation was around 107 billion, and they have reported roughly about 106 billion. If you look at the petrochemical side, we had assumed 15.2% of EBIT margins, while they have delivered about 16.3%. So even on a absolute number, we had an assumption of 33 billion for petrochemical EBIT, while they had delivered about 34.6. We'll have to check for the GRM and all, but our
So the GRMs are at $10.10 per barrel. The GRM number I'm talking about, 10.10.
Okay, so our expectation was $10.4 per barrel, so slightly below expectation. But on EBIT front, we had expectation of 59 billion rupees, which was around 10% fall quarter-on-quarter basis. So which
Sudeep,
looks to be on a yeah.
I'll go to Mr. Tulsian. Mr. Tulsian, you were expecting $10.6 per barrel in terms of GRMs. What is your first comment on this, sir?
That's right. In fact, we have been expecting it to be 10.6, and in the afternoon I've said that we are considering 1.6 as the inventory gain. So maybe the inventory gain must have come little lower, because if you really see the kind of the basis of 10.6 take 10.6, that company has enjoyed a premium of $6.50 in Q1 over the Singapore benchmark. And if you take the same standard, even if you take at $6, it was giving us at about 10.6. But 10.1 also, looks quite good. Maybe the inventory gain must not have been $1.6 as was estimated, but it is way above the street expectation or estimates of about $9.5 or maybe sub $10. But if I take an overall view on the results, on the consolidated numbers, what I've stated in the afternoon, that Petchem is going to be really blockbuster, and exactly that is what it has been seen here. Petchem EBIT has come at 3,417 crore against our estimation of 3,100 crore. That means there is a beat of about 320 crore. And actually, if you just take that, that is probably has compensated to a great extent of fall in the refining EBIT. So overall, Petchem bumper or extraordinary performance from the Petchem segments, and that has balanced the fall which we have seen in case of refining.
Sir, are you worried about you must have looked at the EBITDA margins also, what reasons could you say, for the margins coming down to 16.4% for Reliance Industries? I think market was expecting around 18%.
See, actually, I never take this EBITDA margin because those are all relevant. Those are all irrelevant. You need to play on the individual sector. Now, 2 or 3 things which will be very important, which I will be watching for. Firstly is the crude throughput, because that is what, again, we have been estimating it to be 17 million metric ton plus, to be precise 17.2. And what is the capacity utilization? Because in the Q1 they had 109%. In this quarter we were expecting it to be at 116%. And now if you come on the Petchem or maybe the Petchem quantity production, it was 6.1 million ton in first quarter. We were expecting it to be 6.7 or 6.8 million ton in the second quarter. So I will be watching these two things, and there is no point in taking the EBITDA. Actually, if you really ask me, the kind of in the afternoon also I have said that you need to focus on Petchem and refining. So I would say excellent numbers from Petchem, and this kind of performance is likely to be accelerated because of the paraxylene capacity of 2 million ton getting or going on stream in the Q3. But one or two things which really has kept the bottom line going up. One is the interest liability reduction. I am unable to understand the reason for such a fall, because in the first quarter they had interest liability of 1200 crore, 1206, which fell to 893. Honestly, if you really ask me, I am unable to understand that how the interest can fall, because you have the capex getting added, so maybe it ought to have increased, but it has fallen by about 300 crore. Interest income is exactly same on the expected line at about 950 crore. The other unallocated income of about 630 crore, which was estimated to be at about maybe 350 crore, has given a jump of extra 300 crore, which I hope that must have come from the treasury operations, which I again expressed in the morning. So if you just take overall summary of the results, Petchem extra EBIT of 300 crore has well compensated the fall of 300 crore in the refinery, and the balance increase in the 300 crore which we are seeing in the bottom line has largely come because of the lower interest liability and higher other income of 300 crore, which must have come from the
overall, Mr. Tulsian, you'd say good set of numbers?
Yes, Prashant. I would say that overall good set of numbers, because see, again, if I say that everyone was expecting it that GRM will be in the single digit, so they have posted a GRM of 10.10. That is very good. And Petchem, because the focus of the company going forward is very much on the Petchem, the kind of capacity addition which we have been seeing and the cycle which we are seeing in the polyester and polymer going ahead, the cycle is looking very strong. So I am expecting this margin to get hardened further in Q3 and Q4. So I won't be too fussy on the interest liability,
got that, sir. Got that. Got that. I mean, actually, the three big projects for Reliance are all on the Petchem side, and they're all coming on stream over the next 6 to 8 months or so. As I think you mentioned one specific project there. We have Prayesh Jain also joining in on the show right now. Prayesh, thanks very much for your time. We have a fair bit of detail now coming in. You heard Mr. Tulsian as well. Your first thoughts on the numbers?
See, the numbers are definitely a beat on our estimates. We were expecting the PAT to be around 7,420 crores. They've delivered 7,700 crores. And the main beat has come definitely from the petrochemical segment, where we were expecting the EBIT to be in the order of around 3,000 odd crores, 3,100 crores, and they've delivered 3,464 crores. So definitely there's a beat. Refining slightly weaker than what we were expecting, but the lower interest cost definitely has made up for that disappointment. So overall, net a good set of performance yet again by Reliance.
Deven is also joining us. Deven sir, what is your first thoughts on the Reliance results?
Yeah, well, I think the overall results have come, I think, much in line with the expectation as far as we are concerned. We had basically kept the GRM margins to remain at around 10.1, 10 and above per barrel, I think, and it has come at 10.1. So I think it is largely in line with our expectation. Our larger premises of calculating the GRM, I think, before the result was that they have shifted to a very heavy duty crude from Basra crude, and I think that has basically resulted in giving them a significant amount of advantage on the price, even though in this quarter the crude oil prices have moved up. So that has got an advantage as far as they are concerned. We have also factored into account, I think, the higher amount of petrochemical contribution, because though I don't have the exact number of volume that they have produced, but going by the estimated volume of 7.1 million metric tons, I would think that they have basically scored largely on the volume front on the Petchem side. So both these business units have actually delivered, one on the margin side and one on the volume side, along with the margin in the Petchem. So I think that is where we find that the company's performance is largely satisfactory and probably has met the expectations.
So what could be the stock reaction in the morning as per you?
Well, I would think that given the kind of performance that the company has produced, despite of the fall in the what you call the cracks as far as the petroleum is concerned, the company has basically shown better performance on GRM. My reading says that given the higher crude oil prices and given their ability to source at a lower price the heavy duty crude, the GRM in the third and fourth quarter should remain high. And in the last quarter they should also have the reflection of the coke gasification project into the new capacity that they are commencing. So certainly that could be in a trigger point. I would rather think that the company will announce their commercial operations of the expanded capacity in the refining segment either in this quarter end or maybe beginning of the fourth quarter. They should be starting the new refining capacity as well. So that is what I believe. The stock should react favorably.
Positively.
To me.
I just want to read what the chairman of Reliance, Mr. Mukesh Ambani, is saying. Just want to read that quote out. The company has achieved outstanding second quarter results with strong refining business performance and record petrochemical segment earnings. Refining business sustained high profitability in a tough environment, highlighting our exceptional refining assets, dynamic response to market trends, and robust operations. Petrochemical segment gained significantly from higher volumes, integration, and supportive product margins. So that is the quote which is coming in from Mr. Mukesh Ambani after the results.
Prashant, I also want to make one point because if you look at the last quarter numbers, that is June ending numbers, okay,
The first quarter
numbers, they're actually as per the release which is released now, they are changed than what were reported in the last time.
Okay.
So if you have gone back on quarter one and calculated numbers, then the margins were coming 20.2%. But now if you take this release and calculate the margins, it is coming at 18.2%.
Okay.
So the numbers are changed. So
Okay.
even if we are seeing numbers in terms of the margins reported now versus what were expected, I think that's a wrong thing because the entire
Basically, Q1,
comparison,
which was reported earlier, those numbers themselves have undergone a bit of a change, right?
Yes.
Significant change or?
That time, if you have calculated margins, that was 20.2%. And if you calculate now what they are reported right now, that is 18.2%. So I assume those are significant change. The sales number at that time, which was reported, was 53,500 crore.
Right.
And right now, it is 15,500 crores. So nearly,
Fair enough.
huge.
But to be fair, we are comparing what was expected and what Reliance has reported. I mean, so then there is no discrepancy in that sense. I think Mr. Tulsian wants to come in. Mr. Tulsian, go on.
Yeah, Prashant, actually, continuing with the point what Varinder has just now said, in fact, I think that it is totally wrong to refer the standalone number one. Number two, if you see on the consolidated one, there is absolutely no change if you go by the segment wise between Q1 numbers, what they have reported last time and what they have reported now. It is identical, exactly the same. Just to give you an example, on the standalone, if you take the oil and gas upstream segment, that is showing you an EBIT of about 30 crore as a profit, while the consolidated is showing a loss of 491 crore. So this is futile and this is a meaningless exercise to compare the standalone number now for Reliance, because this upstream alone can give you a shift of about 520 crore in the margin or maybe in the bottom line. So taking 7,700 crore as the PAT, having reported by the company on a standalone basis is futile or is meaningless, because you need to consider the consolidated, because oil and gas upstream abroad, that is shell gas and all that, is a big drain on the profitability of the company. And specifically coming on the Varinder's point, there is absolutely not a single rupee change between the Q1 numbers what they have posted on consolidated basis for each segment, whether you talk of Petchem, refinery, oil and gas, organized retail or others, on account of the turnover and on account of the EBIT, or even for the tax, profit before tax, interest liability. So I think that one should not get confused between is there any change in accounting standard
Point
in
taken.
Q1 vis-a-vis Q2.
Point taken, sir. Point taken. Prayesh, just a quick point. I mean, what is the sensitivity to oil prices themselves for Reliance's refining segment? I mean, I remember late 2014 when oil prices started falling. I mean, actually they collapsed from that point. Many thought that you'll have the margins also which will come under pressure, but they did not. I mean, financial year 16 turned out to be pretty good. We have the opposite situation now. Oil prices are on the uptrend.
See, Prashant, we have to see as to what was the reason for why the crude oil prices collapsed and now why the crude oil prices are rising back. It's all supply driven. The demand side of the equation is not changing materially. The demand is not dwindling at a very sharp pace or is not growing at a very alarming pace. So the demand side equation is not changing. So definitely, if the crude oil price rise from here and they go beyond something like a 50, there is a possibility that the GRMs might come under pressure for a player like Reliance as well, because it's the demand, the petroleum products demand is not changing materially.
No, that's the point. That's the clarity that I wanted, Prayesh. So even in this quarter, oil prices have gone up, right? And yet they've managed refining margins at a very respectable level. So
no, the average crude price for this quarter was not up significantly.
The average end-to-end maybe...
end-to-end maybe higher, but the average was not substantially higher.
But do they have enough, the refined... I mean, can they... Even if, say, for example, oil inches up a little bit to, say, 55, is it possible GRM's refining margins stay where they are? Because, I mean, GRMs are nothing a function of, I mean, what goes in and what comes out of the refinery, right?
See, mathematically, if you ask me, there is a possibility of GRMs coming down, but knowing Reliance, what they've been able to source crude at a much cheaper rate, they have been able to market their product at much better prices than the market. Then there's a high possibility that they might get the GRMs at a good level. Plus, when the petcoke gasification project commences, there could be gains from there as well.
So, Prakash, how you see in terms of stock reacting in the morning after these numbers?
So, there are a couple of things that very clearly seem to, if you see that stock for the last 15 days, ever since we saw the beginning of this series, there was a little bit of a firmness that started off. As we got closer to the result date, there was a little bit of a tapering off or softness that came in because the numbers were expected to be fairly soft, especially on the frontline GRM numbers. But these numbers very clearly will make sure that the stock again gets back into a little bit of firmness, given that there's no disappointment. The Petchem is just the beginning of a huge change that we'll start seeing in the next 8 to 12 months. And it's just going to improve. Now, my only concern there is that there's a statement by the chairman saying REL Jio might also extend the free services period because of the issues that subscribers are facing on connectivity due to interconnection problems. Now, which means that that side of the business will continue to be a little bit of a pull. So, people will want to see clarity on that segment, which should not become a drag for too long. We know visibly that was supposed to be beginning on 1st of Jan, but if that were to extend, it kind of makes sure that the benefit from Petchem improvement in refining margins in the quarters coming ahead will probably be negated. So my sense is the stock will probably see a sentimental resumption of that move, which we saw, not dramatic, but it will definitely be positive.
Actually, Prakash, we flashed this, we put it up as flashes as well. What we are saying is what Jio is telling TRAI is that promotional of 3rd December.
Yeah, but there's also a statement now that it could extend because subscribers haven't been able to get that free services because of connectivity issues.
So you're saying it could
extend.
So we'll pull that part out and kind of put it up for our viewers. Mr. Tulsian wanted to come in. Sir, go on.
Prashant, 2 points I want to add here. If you see the crude throughput is at 18 million metric ton. That is, refinery is operated at 117%. Again, 16.8 million metric ton, what we have seen in Q1 with utilization at 109%. So this is a remarkable thing, which has in fact saved the, has increased the EBIT to a little extent in the refinery segment. But actually, I am more pleased with the Petchem, because in the Petchem, if you see the volume, 6.1 million metric ton was in Q1, which has risen to 6.4 million ton. Actually, if you really ask me, I was expecting it to be 6.6 or 6.7 million ton. This indicates that means the pricing power has come to the company in Petchem segments, not because of the volume, and that is a very positive thing, because the EBIT margin from Petchem has come at 15.24%, and the kind of trend which we are seeing in the current quarter, the same kind of trend is continuing. And as I've stated earlier, earlier that the paraxylene capacity of 2 million ton likely to contribute partly in Q3 also. So that will in fact ramp up the volume of petchem segments to a great extent in Q3. So that is the picture going forward is looking quite positive for the petchem segments, for which I am quite happy, because I was expecting it to be at about 17.7 million ton for refinery and 6.7, but it has come 18 million and 6.4. So both are going in favor of the company on their core business segments. Yeah.
Devin, your last thoughts on the Reliance results before you leave?
I think 2 or 3 points on which I am keeping my eyes on. On one side, I think you have the flexibility as far as the changing your product mix on the crack side. I think this quarter, you had a serious fall into the gasoline cracks. Vis-a-vis that, I think they could manage to pull in with higher amount of diesel and the kerosene. So I think they have the ability to maintain the margins. That is one. Second thing, heavy duty crude and a discounted price with a higher amount of mix, I think that is another positive. Coke gasification project, getting started, that is itself, is suggesting that higher amount of margin contribution. And more importantly, the larger part of the refinery, the 33 million ton additional capacity coming up, that itself, would probably give volume plus, the profit margin advantage. So refining side is likely to remain robust in subsequent quarters. And along with the petrochemical segment, where the higher capacity utilizations have already started for the expanded capacity, I would think that the company should be recording better performance going forward in subsequent quarters.
All right, Mr. Choksi, thank you very much for joining us. I understand you have to run for a meeting. Appreciate it. You know, since Geo is such an important part of the entire piece now, I want to read out Prakash, we were talking about the Geo offers. So this is essentially the clarity one is getting. The Geo offer benefits of free unlimited voice and data will be available to all subscribers up to 31st of December 2016. The welcome offer will be available to all new subscribers for subscription till 3rd of December 2016, which basically means that customers who have not subscribed services till the 3rd of December will not be able to now subscribe to new offers as well as tariff plans that are available from Geo. So old customers continue to get that the free offer and everything till the 31st of December as earlier said, but new people who do not subscribe till the 3rd of December will not be able to avail of it. So this is essentially the change which actually has been made. Prayesh, just one quick point. Okay, I think Prayesh is not with us, I'm being told. Mr. Tulsian, I have a number of $3 billion in terms of incremental operating profits because of the four expansions in the petrochemical segment which Reliance is undertaking and which are very close to commissioning now. The number that the 3 billion incremental operating profit I have is from a Citi analyst. I don't know, if you have any thoughts on this, because this will meaningfully change the overall composition of Reliance earnings from financial year 18 onwards, I'm assuming.
See, Prashant, that is what I have been continuously stressing upon, because if you see the capex again, capex in this Q2 has been seen lower at 17,210 crore, which was at 26,690 crore in Q1 of FY17. That means the spillover will be taking place, and I have been repeatedly saying that the biggest capacity addition will be of paraxylene of about 2 million ton, which we are likely to see getting operational maybe in the third quarter. So I won't be able to quantify whether, but it is definitely going to surpass the $4 billion, because if you take the ballpark, as I said, 26,000 crore was the capex in Q1, which fell to 17,210 in Q2. So I won't be surprised to see a major investment of that is going in the petchem segments. You don't have much in the refinery except maybe Petco gasification plant and all sort of things. So I won't be surprised, and that is what I have been repeatedly stating, that the petchem segment will be the real kicker for the company to grow in the H2 of FY17, because you will be seeing the huge volume growth. That is what I've stated, that I felt that maybe 10% growth of the volume must have been seen in this quarter, which has been in fact exactly at about 5%. So the major expansion benefit of petchem will be seen in H2. It will be difficult to crystallize how much will be in Q3 and how much will be in Q4. And FY18 will obviously be having the full effect of the petchem expansion.
Mr. Tulsian, do you suppose these results and some of the talk around the core business expansions, etc., will move the conversation on Reliance and how people view Reliance as a stock away from Jio, etc. Because one complaint has been no cash usage policy, Jio, etc., etc. I mean, we are here talking about refining Petchem. I mean, the old core businesses of Reliance.
See, again, Prashant, I don't think that the cash usage is being talked now, because in fact, I have been maintaining this for last maybe 6 months, that where is the cash with the company? They have 1,89,000 crore as a debt and cash equivalent of 82,000 crore as on 30th September. So that means the company has a net debt of 1,07,000 crore. So it is futile and senseless to talk that company has the surplus cash. And why should we talk of the cash usage policy, though the company is making good money by deploying the money? In fact, I have never agreed with this kind of concept that on one hand you have 2 lakh crore borrowing and on the other hand you have 1 lakh crore as surplus. So I don't think that the discussion or the debate point of cash usage will continue to be there, number one. Number two, Reliance Jio will definitely be a big hangover, because if you have seen the statement of Mukesh Ambani, he has said that 2.5 lakh crore will be the investment. We have all along been estimating an investment of about 1,50,000 crore, and the major reflection of that will be seen in FY18, because I don't know what treatment of the interest, the amount capitalization will be given in Q4. Logically, that should be booked in Q4, where we will be seeing the huge interest and depreciation on that 1,50,000 crore also getting booked in Q4, while it will not be having the matching margin, or the Reliance Jio business. So if you take whole of FY18, I estimate that Reliance Jio business can give them a top line of 70,000 crore, and even if I take 30% as the margin, which is very ambitious, they will be having 21,000 crore as the EBIT margin, as the EBIT. And on that, if you knock off the interest and depreciation, Reliance Jio will definitely be a hangover. I don't think that will really be contributing any significantly to the bottom line. So in that situation, Petchem, the old core business, will keep driving the Reliance at least for FY18 and maybe even in FY19, because I don't see any clarity from the Reliance Jio business to the adding to the bottom line significantly for next couple of years. They will keep contributing to the top line, but top line doesn't have any meaning if your bottom line remains stagnant or that gets contributed from your core business of Petchem and refining, on which I continue to keep the very bullish and positive view.
So, Prakash, do you also share the same thoughts that for the next 2 years at least, Reliance Jio will not, generate any cash in terms of the profitability for Reliance?
No, so it will start generating cash hopefully from 1st Jan, Virendra. But as Mr. Ambani mentioned some time back, that they also expect that business to throw up margins in the mid-teens. Okay, if we recall, that's what he mentioned. Of course, no timelines were indicated. But as Mr. Tulsian is saying, the interest burden will not make it profitable, though it would, start generating that kind of cash. And we are talking about that 10 million subscriber base, which is something which is going to be, sorry, not 10 million, 100 million with subscriber base. That is critically the mass that you would need to kind of, reach that size of revenue. So I would probably start seeing that clarity come mid FY18, and that's, maybe same time next calendar year. That's when your visibility would start improving and people would want to give it some sort of a discounting, positive or negative. But at this point, the Petchem business is probably undervalued in the stock, if you ask me. That's what is coming out very clearly. If refining were to improve and if it's correlated to crude firming up, which is happening as a trend towards the latter half of this quarter, very clearly going forward, if crude supplies at higher levels were to come into, and with this kind of throughput, which is almost 120% of capacity, you are talking about better margins, or at least retention of the same kind of margins, and improved Petchem volumes and pricing. So there you have a very clear underrated stock from the core businesses. RIL Jio remains an enigma for some more time. It has been an enigma for the last 1 year. It will continue to be another 1.5, 2 years. So I don't think people will get so worried about it at this point in time. But the stock is undervalued from the Petchem expansion potential.
Just a couple of things. We've been talking about Petchem and refining, but there are other segments as well. So oil and gas exploration, which is exploration and production business, which includes, KG-D6, Panna Mukta, the coal-based methane, shale gas, etc. So I'm just going to read out the consolidated number there. You got segment revenues, which are actually down about 10.5%. I'm comparing Q2 17 as compared to Q1 17. So that's a 10.5% drop. Segment EBIT, that is the E&P, exploration and production. Segment EBIT is down 50%. Again, this is quarter on quarter. As I said, this includes, of course, a couple of things, including, of course, shale as well. Let me just move on to retail. In retail, if I can just quickly read out the statements which Reliance has put out. Reliance Retail continues growth momentum with strong performance for the second quarter of the financial year. Reliance Market, the cash and carry chain of Reliance Retail, celebrated its 5th anniversary. Just glancing through the release here. I'm just looking for numbers for retail, which I don't find at this point. At least not consolidated in a table format like we had earlier. Geo, of course, I don't think we have numbers or anything as part of there are a couple of pages which kind of explain what Reliance has done as far as Geo is concerned. But essentially, this is putting together what I think is already in the what is already known. And there is, of course, the media business as well. Full disclosure, Network 18 Media Investments is owned by a subsidiary of Reliance Industries. So that is the segment-wise. I mean, some of the other segments which don't get, of course, talked about as much because the big, heavy segments, the big, bulky segments are Petchem and refining for Reliance Industries. Mr. Tulsian, I don't think you came in on the stock per se. Any thoughts at all on tomorrow and beyond for Reliance?
Prashant, I don't think that the stock should take any negative, because generally what is happening, we have seen in this, if you take the trend of maybe last 3 or 4 years, in spite of the good numbers having posted by the Reliance Industries, it has not seen reflecting into the share price. But at least looking to the Petchem, because as I've said that I'm quite positive and I'm quite enthused by the capacity expansion which we are seeing and the kind of increased margin of 15% plus, EBIT margin of 15% plus in Petchem should definitely cheer the market. Maybe on refining Q3 because of the some maintenance shutdown in the refinery, I don't think that the Q3 will be having an utilization of 117-118%, but that will not fall even 107-108% also. The only worry is that the spread between the Singapore benchmark has fell to $5, which was at $6.5. I'm talking the premium or the differential which the company has been enjoying. So the only worry which market can factor in that the differential or the $6.50 differential has shrunk to $5 over the Singapore benchmark. That may be seen a negative. So refinery may disappoint the market to a little extent, but I think that will largely get offset by the robust performance of the Petchem. And I don't think that this upstream, organized retail or maybe Reliance Jio will really be the sectors or the businesses to consider in this Q2 numbers.
Mr. Tulsian, apart from Reliance Industries, is there any other thing to watch out for in any other stock in the oil and gas space, if you know, in the upcoming numbers, in the upcoming results season?
See, Varinder, I don't think that you have any attraction now left with the upstream companies, whether you talk of ONGC or Oil India or Kane, because if you take a call on Kane standalone, because with the merger having announced, Kane will always rule Vedanta plus 30 rupees, because once the swap ratio having announced, you will not Kane will not have its own leg to move thereupon. Number one. Number two, if you are taking extremely positive call, if you feel that crude can go to 60, 70, $75, then obviously you have to take a positive call on the ONGC and Oil India, which I am not maintaining that view. So maybe in the oil and gas space, upstream is ruled out. Downstream is seen extremely positive if you take a call on all three oil marketing companies, because if the crude starts ramping up, definitely that will add to the inventory gain of all these oil marketing companies, which will eventually see their GRMs also improving, and as such on the GRMs are seen on an improvement, and the no marketing loss are seen now on the petrol and diesel. So maybe I will keep a view on these companies. Coming on the gas front, gas is really a very promising space happening. So you take a call on IGL, Mahanagar Gas Limited, Petronet LNG. These are all looking quite good stocks, So maybe all OMCs and gas-based stocks are looking good. Maybe I will not keep GAIL in that category for the time being, because GAIL may be at the lower end of the gas stocks, which you will be taking a call. So this is the overall view I will be taking on oil and gas sector.
Well, I think we have covered the entire sector, thanks to all our guests. And if we have to leave you with how Reliance performed, the simple word is that Reliance delivered, and it was good results reported by the company. The Petchem segment clearly shined because of the EBIT. If you look at it, for the Petchem segment came at 16.5%, much above than what people were expecting. Even the GRMs were stable for the company. Keep an eye on that inventory gain in that GRM portion. Throughput numbers were strong, as mentioned by Mr. Tulsia, and we would like to thank our viewers and Mr. Tulsia and Prakash Devan and everyone here for joining us. See you on the other side of the break.